Researching stocks can be time-consuming, but there's a way that investors can cut down the commitment. And best of all, it's available to all TD Direct Investing clients. I'm talking about stock analyst reports. These documents summarize the research an analyst has done on a publicly traded company and often provide a recommended action for investors. That is, should they buy, hold, or sell the stock? After reading a report, investors should understand which sector the company operates in, how its performance compares to industry peers, and the analyst's rationale behind their recommendation. Now, these reports are often full of technical jargon and financial calculations, so investors may be tempted to skip straight to the recommendation. But it's important to understand how the analyst arrived at their conclusions. So, let's break down the key sections of an analyst report so you can understand how to get the full picture. First up, the business description. This section should help you understand the company's product or service and some of its key customers. Next, industry comparison. This section compares the company to some of its competitors using different metrics. For example, it's price to earnings, price to sales, and price to book ratios, which measure how pricey a stock is relative to its financial assets. Comparing a stock's metrics to its peers can help you decide if it offers value to your portfolio. Third, company strategy or outlook. This section gives readers a glimpse into the company's business model. Here, you might find details about upcoming products or service improvements, potential mergers and acquisitions of rival firms, and supply chain developments that might impact the business. Fourth, financial statements. Here you'll find summaries of the company's latest quarterly or annual finances. It can be easy to get lost in all the numbers, but look for commentary around a few key items. One of them is capital allocation, which indicates how management is spending money. It's usually a key factor in a company's potential because companies that spend money wisely tend to outperform those that don't. In this section, the analyst may also outline any fundamental analysis they performed on the company. For example, calculating financial ratios such as price to earnings or price to sales. These calculations are most valuable when compared to those of competitors in the same industry. The fifth section we'll touch on is the fair value or price target. This figure is the analyst's estimate of the long-term value of the company's stock. It's calculated by estimating the company's future cash flows while adjusting for various uncertainties that could throw it off course. The price target indicates to readers how much upside or downside the analyst sees in the stock. Keep in mind that each report is just one analyst's estimate, so you may want to consider others in addition to your own research. The sixth part is the recommendation. This section is where the analyst offers their opinion on the action an investor should take on the stock. Buy, which is sometimes called outperform, overweight, or undervalued. Hold, which can also be written as neutral, market weight, or fairly valued. And sell, which also goes by underperform, underweight, or overvalued. Of course, some analysts use a different system, such as a letter, number, or star rating. Lastly, the additional comments or notes section. This often contains the methodology and assumptions the analyst used to draw their conclusions. This can be very different between analysts, and one reason why there can be a wide range of opinions on the same company. So that's a quick rundown of what to look for when reading a stock analyst report. Remember, you can access a whole library of them by heading over to the Reports tab in Webroker. And if you're interested in learning more about what's offered, watch our video about researching stocks on the platform.